Welcome back to Portfolio, everyone. In today's video, we're breaking down Berkshire Hathaway, Warren Buffett's company, to determine if now is a good time to jump in and buy this growth stock before we see a nice surge in share price. So we're going to determine if we believe this company is actually undervalued right now, go over some company news headlines to determine if it's a great time to buy, and we're going to go over what Warren Buffett is actually doing with this company, and just overall determine if now is a good time to buy, and go over some of their news headlines to determine if we like the moves Buffett is making right now. So welcome back to Portfolio, everyone. So as you know, I'm the Gen Z investor, and every single day on this channel, we talk about different stocks you can buy, overall stock market performance, and any other big stock market news and headlines. And in this video, we're breaking down Berkshire Hathaway, ticker symbol BRK.B, which is Warren Buffett's company, to determine if now is a good time to buy the Oracle of Omaha's stock. So if we take a look first at the price chart, you can see here on the 1-year chart, they're up close to 6%, up 5.7% on the 1 year. Moving over to a longer term perspective, they were up close to 46%, so nice long-term share price appreciation. And of course, on the 10-year chart, they've seen insane 160% growth over the past 10 years. So a beautiful long-term holding for a nice portfolio. If we take a look at the 1-year chart once again, you can see here that they saw March lows, and they haven't really fully recovered back to that pre-pandemic level. 52-week high at $231 a share. They're trading somewhat to the middle, a little bit on the high side, but nowhere near that 52-week high right now. So this is a massive company with a market cap over $500 billion. And of course, their CEO, Warren Buffett, is one of the greatest investors of all time. And he's been making headlines, making a bunch of purchases. He's been buying back shares, and he's been adding to his stake in Bank of America Corporation. So it's very interesting to see how these companies play out and how these moves work in the future. We're going to break down each of these moves and determine if we like what he's doing and if we think it's going to help grow the business moving forward. So the first thing we have to talk about is that Buffett buys back a record $5.1 billion in Berkshire stock. If we take a look, this is the most Warren Buffett has ever bought back shares in a single period. So the company reported that it bought back $5.1 billion worth of stock in May and June, surpassing the previous high of $2.2 billion in a quarter, which happened back in 2019. So they've more than doubled the amount of shares they brought back in a single quarter. So Warren Buffett is putting that large cash pile to use, and he's actually purchasing his own shares back, which may indicate that he believes his shares are undervalued. And if you take a look, pre-pandemic, his shares were trading around $230 a share. Now down below $210, he may see a lot of value in where his shares are being traded right now, which is why he's putting some cash to use and purchasing those shares. And of course, $5 billion is very minimal compared to the insane cash pile he has of over $120 billion, but he is putting some money to work right now. So he bought a combination of both his Class A and Class B shares, $4.6 billion of Class B stock, and around $486 million of its Class A shares. And if we take a look, Warren Buffett's company Berkshire has actually underperformed the market as of late. Of course, we've seen an insane rally in the S&P where it's actually backed above pre-pandemic levels, but Berkshire Hathaway has not reached that rally just yet. But overall, they've had some nice growth from their holdings since that March lows. A couple of their more publicly traded companies have gained $34 billion in value in a single quarter. And of course, this is from some of their largest holdings, such as Apple, which makes up 41% of Berkshire's stock. And of course, other companies like JP Chase and Amazon have seen insane growth from the March lows. JP Chase from the March lows is up 27% compared to Amazon, which is up 66% from the month of March. So Warren Buffett is buying back shares, which once again may bring back the illusion that it is undervalued right now. And if Warren Buffett's buying his own shares back, and he's a value investor, if he sees value in Berkshire, I'm sure a lot of other investors will see value in his company as well. Moving on, Warren Buffett is continually buying Bank of America. So of course, we all know he has that insane cash pile, and he's finally putting it to use, and he's been buying Bank of American stock over the past couple of weeks. So between the days of July 31st and August 4th, he bought $337 million more of Bank of America stock, and in total, he spent $2.1 billion in Bank of America stock over the past 12 days. So in a matter of 2 to 3 weeks, he spent over $2.1 billion, and he brought up his stake in Bank of America up to 12%. So he's been making big moves. He's very bullish on the stock right now, boosting up his stake and spending $2.1 billion on their shares. So Bank of America is actually Berkshire's second largest holding, behind Apple. And he actually has permission, so Buffett actually has permission from a regulator to purchase up to and increase his stake to as high as 24.9%. of Bank of America. Unsure if he will continue to buy up to that level, but he does have a lot of room left over because his stake is currently around 12%. So he can more than double his current stake into Bank of America. So Warren Buffett loves dividends. Of course, he loves collecting those quarterly payments, and Bank of America has maintained their dividend. They have not cut it, and they are one of the banks that passed the Fed's stress test and will continue to pay out that dividend at the same rate moving forward. So of course, we saw the big moves Warren is making and how Berkshire is performing. We're going to take a look at how they are considered valued by analysts. If we take a look at Morningstar, one of a trusted valuation metrics, you can see here they are ranked 4 stars, which represents undervalued. You can see here Berkshire Hathaway is actually on the undervalued side. And of course, Warren Buffett himself says he likes buying excellent companies at fair prices instead of fair companies at excellent prices. But his favorite thing is to buy excellent companies below their fair value. And if you can take a look right here, it is indicated that Berkshire is actually trading below that fair value right now, which may show that it is a nice buy to jump into this company. And of course, when you purchase Berkshire, you're not purchasing one company. They own and operate hundreds of different brands across the world, and they have a huge public portfolio of some of the biggest companies on the market. If we take a look at Berkshire's balance sheet, you can see here that their total cash on hand right now is $137 billion. Of course, over the past couple of weeks, he's been buying back his own shares and he purchased a little bit of Bank of America, so his cash pile may be somewhat depleted, but if you take away that 5.1 and that 2.1 billion he just spent over the past week, that leaves him at around $130 billion in cash on hand to make big moves on the market. So even though he is starting to act up and starting to make those decisions and buying different stocks, he still has so much cash on hand, he can still buy out tons of companies, take large stakes in a bunch of different companies on the market, and I'm sure he's waiting to find some nice value in there before he makes those huge moves. So this balance sheet is still spectacular, so much current assets on hand for him to make moves. They are still collecting a ton of dividends. Of course, with Wells Fargo's suspension of their dividend and their 50% cut, that did hurt like Berkshire's dividend income, but overall they're still bringing in billions of dollars of dividends each and every year, bumping up that cash position. As you can see here, 5 years ago, they had around $64 billion in cash, and they've more than doubled that into their last report. So over the past 5 years, them doubling their cash balance just shows how much of a cash cow this company is and how much cash flows they're actually bringing into the business. So we talked about how Warren Buffett has been buying more Bank of America and boasting up his stake to around 12% of the company. Let's take a look at how they've actually performed. So Bank of America stock is down around 6% on the 1-year chart, currently trading around $26 a share. You can see here they saw the March lows and have nowhere near fully recovered. The entire banking sector is being hit very hard right now. You can take a look, they are trading on the low end of the 52-week range, which is why Warren Buffett may be seeing value at this price point. And of course, with regard to their dividend, they're still paying out a beautiful yield right now of 2.76%, and they actually have a very sustainable payout ratio of only 46%. So Bank of America passed the stress test. They are one of the banks that did survive and can continue to pay out their dividend at this current rate. And I believe Warren Buffett sees value at the current rate, and he also sees that this is one of the banks that will survive and actually grow into the future as the economy starts to recover, interest rates go back up. He believes this company will continue to be able to grow revenue and continue to grow long term, and that's what Warren Buffett does. He believes in long-term blue chip stocks, and of course, Bank of America has been that. Over the past 10 years, they're up 87%. So they can, even with this huge decline in share price, still overall long-term nice hold. So that's how Bank of America is performing. If we take a look at Berkshire's overall portfolio, you can see here that they have some large holdings in some of the biggest companies in the world. So their largest holding is Apple, which makes up around over 40% of Berkshire's public portfolio. Bank of America, which we saw they're bumping up their stake to close to 12% of the company, which has a value of around $26.9 billion. They also own around 9% of Coca-Cola, 18% of American Express, and around 26% of Kraft Heinz. So this Warren Buffett portfolio, and this Berkshire's overall public portfolio, is holding insanely large companies across a bunch of different sectors of the market. Of course, he does like his financial companies. You can see here he also holds a huge position in JP Morgan Chase. So he is a huge fan of banks and of different consumer brands. He actually has large positions in other companies that are more innovative as well. You can see here he holds a position in Amazon at over $1 billion, which is nice to see, which has been growing extremely fast. He likes other, more retail brands such as Costco, again, a $1.5 billion stake. So he's done a great job of diversifying his portfolio around a bunch of different brands. And when you purchase Berkshire Hathaway, you're really buying an ETF. You're not just putting your money into one company, you're putting your money into a variety of companies that all continue to grow long into the future. And of course, Warren Buffett has said himself that Berkshire is a company that will never go under. because they're so diversified, because they're such good at their cash management and growing that cash position, this is a stock that isn't going anywhere anytime soon. So if you believe if this stock is undervalued, and you may see some opportunity right now, because if Warren Buffett, who is solely a value investor and only likes purchasing stocks when he believes there's strong value, his famous saying is he likes buying $1 for 66 cents. He likes buying things when they're undervalued. So he believes his own stocks are undervalued right now, which may produce some nice shareholder returns if he continues to buy, and if other investors see that and they buy in right now too. So this is our little quick analysis on Berkshire Hathaway. If you believe this growth stock is a nice little addition to your portfolio, please jump in. Thank you for tuning in, everyone. That is the end of today's video on Berkshire Hathaway, and I'll see you in tomorrow's video.